Top of the morning, folks. Um, I hope everyone had a very interesting weekend. I mean, a very peaceful weekend. I hope you had enough of rest. Um, of course, this is this week's commentary, and of course, we're talking about dollar index. I mean, before we begin for a moment, if this happened to be your first time on my YouTube channel, I'll counsel you to kindly support the channel by subscribing and sharing my video with friends, and just really delve into the playlist. Someone would go into my YouTube and think probably the commentary expires with every passing week. Well, that's not the point of it, really. The point of it is to communicate my thought process on price action and to really teach how to manage expectations. Now, doesn't mean you have to be right every single week, no. But truth is, there are periods when you're likely to be wrong. For example, last year we're talking about dollar index, talking about how the markets will reach for buy side here, and potentially trade into this fair value gap here, like completely close this fair value gap. And I recall strongly that my temporal disposition would be for prices to for prices to maybe for me personally to wait as soon as prices reach this objective we get, because I know that this is a high time frame level and objective, of course. And when prices hit a high time frame objective, there's always the likelihood that the markets return back into the range. And basically, I don't know how that's going to happen, really. But all I know is that there's going to be a reaction and rejection off of those levels. And here comes January's trading. I mean, I've been talking about how dollar index is bearish since the start of this year, and really I couldn't say anything in price action to validate that expectation. All I know is that based off of data, we're gonna see a bearish dollar at some point, and I just didn't know how that was gonna come about. Okay, and that's gonna even bring me to price action of this month and even last week's trading, because we had some expectation, particularly last week from Tuesday. I think I didn't trade anymore. I didn't try to trade or try to put it in position. I just completely left it up. I think apart from was it Tuesday? I think Wednesday-ish. Really, I'm currently, I think Wednesday, yeah. And I just wanted to just allow markets to trade so I can get a full-on expectation on what they're likely to do. Because here it is. It's not like personally trying to think Euro USD cannot be bullish. Thing is, I always knew that underlying narrative on dollar index is bearish, but there was nothing in price action, at least the very least, that could help me validate that expectation or validate reason for dollar index to be bearish is market structure. And that's why last week I kind of did like a pre-market analysis on dollar index. I was talking about how a daily time frame shift in market structure in line with higher time from order flow is actually a shift in market structure. It appears when we all know total soup, market structure shifts against the higher time from bias, maybe a run below a previous monthly low, a run above previous monthly high when the higher time from order flow is changed. For example, here, look here, we had this monthly candle and we have this monthly candle. We can see how a run above this previous monthly high look at the settlement price. Okay, settled inside of this month's range. Okay, that set the stage for lower prices here. And the same thing here. Look at the settlement price here. You can see how, even though it was bearish, but it settled inside this candle's range. So this was already giving a clear indication that the next candle was going to return back into this range. Okay, probably the midpoint of it, probably, but then if we look at data at this point in time, you see that dollar index here was very bullish. Okay, and that itself has given signal for a longer term one-sided price action. And now talking about this year's trading, if after I think my trades, because I called out a particular trade, and I think first off on the New Year's Day, talking about Euro USD and the setup that was going to form for dollar index to trade into the close of this month, the fair value gap. I mean, if I took the trade and probably after that trade I did no more, I didn't trade again. I mean, that's why I have to not didn't trade particularly. Probably I didn't have any longer term perspective, because there was no point of longer term perspective. My longer term price objective was met. I mean, it took weeks, a month for prices to close this fair value gap. So and now that there is a shift in sentiment, which I was always parroting, I mean, there was no point in trying to do anything, just stay on the sidelines. And the reason why I'm saying this is, for anyone watching, and just understand that this doesn't only work on the monthly time frame, even on the weekly time frame. And that's one of the core reasons why, when I'm personally running my analysis and saying, okay, when prices hit previous week's high and stuff, I want to be on the sidelines. Not because the markets can continue, of course. If we're under the high time from outflow, markets are likely to continue, in fact. But it now depends on your entries. For example, if you took a setup intraday for a run on probably the weekly low, and on a daily chart you probably missed the sell-off on Tuesday, Wednesday, and that move was happening on Thursday. Okay, I mean, you're kind of like trading at a discount relative to the weekly low. So the chances that the market returning to the internal range to wipe off your entry, if you hold it long enough, is very, very high. Okay, and that's what you're trying to avoid. But if you got a very premium entry, I mean, what else? You're likely to if market correct, you're gonna lose some profit, yes, but at some point, if you hold long enough, market will just resume bearish, and then you can hold for longer term price objective. It just depends on where you're at the daily range. Are you a premium? Are you a discount? So this is the last week of January's trading, and currently we've seen dollar index reject from this fair value gap, this objective, and we know that the DXY is bearish. Underlying narrative on dollar index is bearish. Not just bearish because of, we looked at some lines of commercials and stuff like that, because that's the perspective of data talking about DXY bearish. But we can also look at the perspective of market structure. Okay, and what really is market structure? Well, you can see this price action here. If you look at this swing high here, this swing high on the weekly time frame, since we're having a swing high here, this already defines market structure in the daily time frame. If you do not know, when you have a swing point from on the high time frame, this high, lower high to the left, lower high to the right, when it forms, you're actually looking at a market structure shift on the subordinate time frame. For example, if I'm looking at a swing point form on daily chart, I'm already looking at a market structure shift on forward chart. Okay, so we have a swing high form on dollar index, and prices returned into this gap here. We have a bullish order block and all of that. But now that we have a market structure shift in line with high time frame buys or high time frame order flow, okay, The objective is not to think of this level, this PD arrays here, as support. Okay. My thought process is to visualize them as internal range, and market is going to run through them. Okay, and that's what my thought process is. And I was talking about when I was talking about short-term trading earlier at the start of the year. I was talking about how you want to note the midpoint of the dealing range prices are currently trading into. Okay, and what's the midpoint? You take your fib from this low to this high, or this high to this low. However, and the midpoint of the Fibonacci level is you want to note, because below that level is discount. Okay, so since we have a market structure shift now on the daily time frame, and markets are currently at a premium. Why do I think they're premium? Well, we're still at inside, we're still within this range here first, and if you measure from this high, here to this low, okay, you can see we're still above the midpoint, so that's premium market. Okay, let's play here. So this is premium market. Okay, we're still premium market. So the possibility that whatever trades we're taking, is gonna be like a short-term trade or swing trade is very high, because now that we have a market structure shift in line with high time from buys, market's still a premium, and we could likely see expansion. Okay, now if you look closely here, we have a swing high, a lower high to the right, lower high to the left. So our draw liquidity this week is from the markets to reach for what the previous week's low. Okay, basically that. Now, if that has been defined, saying the markets are likely to trade into this week's low, okay, that means our objective now that we had a bullish opening range, okay, we want to determine the key level market is likely to trade into, and then we can now utilize that as a high time frame resistance level, and we use it to frame a setup into previous week's low. Now, like I said when I started this commentary, is that now the markets could trade inside the previous week's low, and probably just consolidate for the rest of the week, because yesterday I was scrolling through Twitter, and on my timeline on Twitter I was seeing a lot of analysis on dollar index, and absolutely stunning. I mean, it's obvious dollar index is bearish and everyone is calling for bearish dollar, but this is the thing, will dollar index sell off? I think so. There's a 99.9% chance that we see a bearish dollar, but truth is, we don't know how dollar index is going to unfold. I mean, just look at today's opening range. Markets just opened bullish on dollar index, and probably some might be expecting it, some might not be expecting it, and that's the whole point of it. We don't know how the market is likely going to deliver prices. All we know is that, okay, there's going to be a delivery, and we know a target, and we have a primary level we're expecting them to possibly trade into, which they really don't have any obligation to trade into, because I would say the markets are always right, and not just that, the markets are just trading. You are the one with expectations. Yeah. So having said that, we are looking for a potential bearish dollar, and we really don't know how this week is going to trade, and we could stay in consolidation all through, although we have news events, and we know there are periods when there's FOMC and all of that, and the market still don't give those large ranges. But of course, we will deal with what we can predict, and that's what we're going to stay on, and we're not going to stay on the things we cannot control, simply because it's only going to inspire fear. Literally, it's going to inspire fear, and that's why sometimes a lot of folks don't like listening to people tell them that, okay, be patient, be wary of this market condition and stuff like that, because they feel like, are you trying to tell me not to trade? Why are you trying to tell me? So if you look closely, you see that on DXY, we have a low here, we have high here. So this is the ICT bearish breaker, and we have a bearish order block here. Okay, we have a breaker here, and we have an order block here. So the process is that prices utilize this bearish order block for a run into the high time frame discount. And what's the high time frame discount? We measure it on a weekly time frame. Okay, you can see this volume balance. Of course, this capital.com here, not TVC. This capital.com. So if you want to see the same price feed and price action, you have to change to capital.com, and you're gonna have the same price action. So I'm looking at this bearish order block and stuff like that. So particularly for me, this week I'm gonna be assuming that we're gonna be having a short-term trade. That's my first disposition anyways, regardless of what I might think. I don't know how the market is going to deliver. All I know is that this is a level here, the daily bearish order block. Now someone might be watching this commentary for the first time and wondering, okay, why not here? I mean, your expectation might be you want the markets to trade into the bearish order block. I mean, this is also the bearish order block now, and that's the thing about expectation. Okay, I don't know, there might be someone watching and wondering why here. I mean, when ICT talked about bearish order block, he talked about the sensitivity of the bearish order block, talked about the low and the consequent encroachment before the body of the candle. Okay, and the reason why there's several talking points about the bearish order block is because obviously the market finds sensitivity in several places. Or just for example, say we're bearish and look at this fair value gap. This was a terrific here, and look at this fair value gap in hindsight anyways. Okay, someone might be saying, okay, fine, I want to sell off from this daily fair value gap, but the market has got to possibly like completely close this fair value gap. Now what do you see here? Did the market close the fair value gap? No. And that's the same thing I always talk about, the market being probabilistic. Okay, and that's how you manage your expectations, because you want to have low hanging objective and low hanging targets for markets, because they could utilize any array of this, but what's the most likely PD array they utilize is the low of this bearish order block. So now if you settle for the open of this candle because you're waiting for a precise entry, because that's usually the motive. Trust me, I've done that a long time ago. I did it a lot. The motive why folks would say, oh, I can only sell a fair value gap when they close the fair value gap, is because they want that very precise entry, something that market just touches and they just expand quickly. Nobody's willing to sit through drawdown. Really, drawdown is not really a nice experience. It's not like I enjoy sitting in drawdown on my entries, but I realize that there's no point in trying to get the perfect entry. I'm missing a lot of opportunities. Okay, I need to capitalize on my opportunities. So the only way I can capitalize on my opportunities is if I get in on the place I know that I'm going to get the easiest fill. Okay, so it's not really the ICT concepts don't work, it's the handler. How do you manage your expectation really is everything, and it starts from how you pick your levels and how you define risk, how you define everything. Really, that's how you manage your expectations. So that being said, we're looking at potential bearishness on dollar index, and on the forward time frame we have this level here, a mitigation block, a break here. If you think about it, like we have high, high, and shift in market structure. Okay, so it really depends on how you want to see it. And we have a bullish opening range here. You can see the bullish opening range here, of course. And basically, if you're under buys, okay, if you want to take a bet based off of the high time frame buys, you can go short here and manage your stops, how you manage and stuff like that. But someone who is going to day trade has to apply time of day, London session, 9 a.m. London session, that's West African time, so it's 3 a.m. New York time, and you want to study price action and all of that. But me personally, I wouldn't indulge in trading London session, especially Mondays. I prefer to trade New York session day trading. I prefer to day trade in New York, but unlike previous daily ranges, with the daily time frame has kind of like exposed itself early on, because we already have a bullish opening range, so we have like data to work with, okay, and we have a PD array which prices are currently close to. So I don't instigate that you should trade in London session, but for me, the reason why I wouldn't be doing primarily is so I can continue to stick with my rules, okay? Because if I trade today in London, especially based off of day trading entries, and I'm profitable in it, I'm likely to make the mistake some other time, and maybe I don't get so lucky. So it's just for the sake of sticking to the rules. It's looking like we're gonna get something, but I want to shut my eyes to it, and I just want to stick to the rules, because that's all really that matters. Okay, I just want to keep my purity. It's the new week, and just want to continue sticking to my rules. So that being said, on Euro USD, really there isn't so much on Euro we can really discuss. I mean, it's just crazy that we're talking about this price objective some weeks back, and currently the markets are bullish, and really would have gotten in. I would have gotten very good entries, but I didn't. But thankfully, this is the first month has passed for bearish dollar index, because if you did not notice, January is bearish for dollar. That's what it is if you look at the monthly chart. Okay, so we still have maybe a couple weeks to run for a bearish dollar index. Could be we could have 4 weeks left, we could have 8 weeks left, but all I know is that dollar index is currently bearish, and we have an opportunity to participate in that move. So Euro USD is just a mirror of dollar index basically, and we have a swing low here. Our inspections for markets will return into previous week's high, and if we draw our fib from here to here, we have a short-term price objective, okay, and that's this premium fair value gap. Okay, we're looking for prices to return into this premium fair value gap. Okay, although there is sort of you can see there is like a volume imbalance, but of course if they eventually get there, you would expect prices to just run through and return into the premium fair value gap. Okay, so this is the level I'm eyeballing for objective, and expecting that the markets reach for this price objective here. And let me take this off because I think I have something on lower time frame. Just trying to keep it very tidy, because it's all about the thought process really. It's not even about the lines. The lines just explain the thought process. So yeah, we have our objective, longer term price objective, or short term price objective here, and our job this week is to get profitable trading off of this week. And like doing this, we have some old we have this old daily fair value gap which has been inverted on Friday, and now we, of course, once it's been inverted on Friday, I was personally expecting markets to return into it, yes, and now into the daily bullish order block. So this is the order block, and this is I think the move is likely to ensue here. And if peradventure we consolidate this week, there's every tendency that the price still maintains this swing point. I mean, if peradventure we see markets run through this low, I'm still going to be bullish. In fact, once they run through this low, I'm going to be looking for longs on Euro USD. So it's better you don't throw in all of your risk trying to trade off of this level this week. So you have to preserve your risk, because I mean, you don't go all in. You're risking all of your account because of Euro USD is bullish, blah 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 blah, yada yada yada. We have February's trading. February's trading is going to be interesting too. Okay, we have bias and we have 4 weeks, and each candlestick is not going to have an infinite movement. All the weekly ranges are capped. I always say that. It's just a way to tell myself, okay, if I miss this move, I'm likely to get in on the setup in the next week. Okay, so we have this inverted fair value gap. Markets are returning for support. We have a daily bullish order block for support, and although the market haven't traded yet into the daily bullish order block, so we're gonna see there's time of day to manage that expectation, to see maybe Euro as it trades into the order block. Mind you, price is already returning to the inverted fair value gap. Okay, and that being said, whatever happens, I don't really know, but I know we should markets are likely to capitalize from this fair value gap here into buy side here. So I hope you found this one insightful. In the meantime, be safe.